Everyone. My name is Nick Schrammick. I am the Director of International Relations at Silicon Valley Forum in San Jose, California. So we are the organizers of this webinar series, and today's topic is on insurance technology and the impact of COVID-19. We have just a wonderful panel here for you. So it's going to be quite a lively discussion. If you have any questions throughout the time, feel free to just drop it into the chat box. Our moderator, Rob, will be monitoring that chat box. So please go ahead and stick your questions in throughout the hour. I think that's all I have to say. I'm going to go ahead and turn it over to our Executive Director, Denise Cardozo, to welcome you and kick this off.
Thanks, Nick, and welcome everybody. We appreciate you joining us today, and we do hope that you and your families are well and staying safe at this time. I noticed that we have many new people joining us today, so I'd like to start off by telling you a little bit about our organization. So Silicon Valley Forum is a 37-year-old nonprofit supporting the global startup and technology ecosystem. What that means is we create content and organize over 50 programs and events per year, including innovation and technology programs across many industries, boot camps and programs for startups and executives, conferences, and thought leadership roundtables surrounding diversity, equity, and inclusion. And recently, our newly launched Women in Tech and Female Founder series of programs. If you want to find out more about what we do, as well as sponsorship opportunities, please visit our website at siliconvalleyforum.com. We are also a very proud subsidiary of the Silicon Valley Organization, or the SVO for short. They share the same commitment to the business, startup, and technology community. They bring together leaders and influencers, are a catalyst for business growth, and a champion for a stronger community. They offer many resources and programs to educate and support your company. So I encourage you to find out more about them and the incredible work that they do at their website, thesvo.com. If you have any questions about either organization and how you might want to get involved with us, I will put that contact information in the chat box. So let's kick off the program now. We have 4 incredible speakers with us today who will discuss what the future can potentially look like when we think about insurance, technology, and innovation, and the impact from the current pandemic. I'm going to now turn this over to our wonderful moderator, Rob McIsaac, who is the Executive Vice President of Research and Consulting at Navarca. So Rob, over to you.
Thanks, Denise. Great to be with everybody today. You keep saying 1 o'clock and I'm looking at my watch. It's 4 o'clock here in North Carolina. But it is terrific to be with you all. As Denise said, I am a principal at a company called Navarca, which is a technology research and advisory firm that is focused exclusively on the insurance world in North America. And we very much focus on that as a geography because there are so many unique things about what happens based on the regulatory environment that's here. That's a role that I've been in for 8 years now, but I spent 30 years before that as a practitioner in senior leadership roles in IT organizations across financial services, mostly in insurance. So I was a divisional CIO at companies like Prudential, Guardian Insurance in New York City, Nationwide Insurance in Columbus, Ohio. Also was an enterprise CIO at a company called PennCorp Financial. And during the last financial crisis was an enterprise CIO at a top 50 US bank. I say that, and it's interesting because we were a healthy bank during that period and we wound up acquiring 9 other banks in 18 months. And I became very, very friendly with the FDIC, the Treasury Department, and other regulators in that space. We're obviously in a different kind of environment today that is a consequence of COVID-19. Although insurance carriers were facing many other headwind challenges as the calendar flipped from 2019 to 2020, and I think some of that will influence our conversation today. For a guy who's never lived in California, I spend an awful lot of time in Silicon Valley and in San Francisco. Denise and I have had a chance to partner on a number of innovation tours that we've done out there with our client carriers. And we have about 150 carriers that have advisory agreements with us, and that provides a lot of traction and interest in the whole innovation space. I also, earlier in my career, ran the innovation group at Prudential. And so during the first .com era, had a chance to experience many of the things that we think companies and carriers are likely to be experiencing now. I do want to have the panelists introduce themselves. I think we have a fascinating subject and an awful lot of experience that we can impart relative to the subject. So we'll kind of go around the Brady Bunch screen or the Hollywood Squares screen, depending on your point of generational reference. So I'll start with Sanjeev and then go to B and just ask if you wouldn't mind introducing yourself, where you're from, and a bit about your company, and maybe a little bit of expertise or thought about where we are right now. So Sanjeev, then to B, and then on to Dinesh.
Thanks, Rob, so much. It's nice to be here with everyone as virtually as possible. As Rob said, my name is Sanjeev Parikh, and I lead Avanta Ventures, which is the venture arm of CSAA Insurance Group, which is part of the AAA insurance ecosystem here, if you will. Avanta invests across insurtech, mobility, and insurance adjacencies around risk management. We have a range of investments in the insurtech space. We're up to almost just shy of a dozen investments, but we also incubate companies in our studios effort to drive early stage innovation. And we have another 10 companies in that portfolio as well. So my background real quick is I'm not an insurance expert, but I've been investing and have been an entrepreneur for over 30 years across a range of companies like Microsoft, Hewlett-Packard, HTC, and so on. But this is what we do and what I do. And so we drive innovation and leverage all of the startup innovation that is out in the community and help young companies grow and become more successful. Let me pause there and hand it over to B.
B, we'll let you take it away, and then we'll come over to Dinesh.
Sounds great. Thank you, Rob, and thank you, Sanjeev. My name is B. Elbert, and I work for IBM. I've been in the insurance industry for around 20 years in various roles and responsibilities in both inside of IBM and outside of IBM. I also have spent a little bit of time in the healthcare industry, worked for the healthcare industry as well as industrial sector too for a little while. But most of my career has been spent in insurance, and so I've spent, IBM spends a lot of time obviously focusing on the enterprise aspects and the needs of the enterprises wrapped around the kind of our industry expertise. So that's my job in the global insurance general manager for insurance. And so to bring the technology solutions, the innovation, right, that we see out there also from InsurTech, to bring those together with the capabilities that IBM develops and brings to our clients, to our large enterprise clients. That's our focus area. And as and even as you've seen, even as followed us a little bit in the last several years, in the change in leadership there, we've kind of doubled down on that of making our industry focus as well as the capabilities and solutions we bring to our clients married together and deliver value and help them through the innovation phases that they need.
Awesome. Thanks for joining us, B. And then we'll go to Dinesh and then to...
Hi, everyone. Super excited to be here. So I'm based out of Chicago, Midwest, and I work for DocuSign, and I think a lot of you are probably familiar with DocuSign. I see a lot of my team on this call, so thanks for your support. Some of our customers, so really exciting. But I manage a team inside of customer success that's deployed to our top carriers, and we are focused on insurance. And so obviously insurance is a very, very important vertical to DocuSign, and I know a lot of you are probably familiar with DocuSign for e-signature, but we really support the entire agreement process. So from preparing a document to signing it to, once it's signed, something needs to happen. So agreements drive business, so it might need to go to underwriting, and then you need to manage that document. So I've been really fortunate to work for a company that is really supporting our clients, during this time of crisis and can really help drive remote work. And so I've had a very kind of unique opportunity to understand a lot of the challenges that are going on in the industry, but also see some of the opportunities that are emerging. So really looking forward to the discussion today.
Awesome, thanks. Snezhina, very nice to see you.
Hi, everyone. Thank you for the opportunity. I'm Snezhina Zakaria, the founder and CEO of Insurify. We are changing the way people buy, compare, and service their insurance online. We are an online comparison platform that leverages artificial intelligence and natural language processing to simplify and automate the education, research, purchase experience, as well as the service experience as it relates to P&C, and now also expanding to other verticals like life and pet and health. And our passion is to demystify insurance and to really make insurance simple and give the power to the consumer to make the right decision and the right choice about their coverage and about their companies by leveraging predictive recommendations. We have been transformative in the industry in also helping carriers around the country to simplify the online flow and also to understand how they might be able to create the right experiences so people can do what they need, whether it is purchasing or servicing their policies. And I'm excited to be here today and to share what we have seen across P&C as well as life.
That's fantastic. Well, I'm really glad everybody's here. And as Denise has heard me say before, one of the things that we think is so unique and so special about Silicon Valley is that it really illustrates the ecosystem that is part of driving insurance as an industry. And you get a chance, as you see with our panelists, to have companies that are very mature and have been there for a very long time, going back to the dawn of the computer age like IBM, as well as companies that are very new to this space, creating capability. And it's really the ability to bring those things together and marry them that help to create a world that insurance carriers can survive and thrive in. And that's part of why we bring people to the Valley, so that they can see how these things work together and interoperate. But a pandemic is something that's not happened to any of us before. And so Dinesh, I was going to start with you, and I'm going to pick up on something you said, and then Snezhina, I think this will come over to you. But the notion of a pandemic is something that my grandmother, who was born in 1902, told me about when I was a little boy, but I sort of dismissed it as something that would not be part of my experience, how wrong I was. And when you think about it, Dinesh, from the DocuSign standpoint and some of the things you're seeing, this pandemic hit with surprising speed, and it forced insurance carriers and others to respond with a level of urgency that we very rarely see. How have you seen carriers react, and how has it changed some of your interaction with those carriers as they get ready for the future? Any insights that you can share on that?
Yeah, Rob, that's a really great question. I think for us at DocuSign, I mean, first, obviously, I think as many on this panel, one of the most important things was the safety of our employees and making sure that they transitioned okay to work from home. And, we gave certain stipend. We gave every employee $1,300 in stipends to make sure they were okay. But and they were supported and they had everything they need, because with our carriers and our customers, what we saw, and I think we can all agree, we've all been to corporate offices. We know that there was a very in-office culture, right? And so I think that transition with the carriers that we work with, we were definitely sensitive to that. And, there's certain things that needed to happen that had never happened. I talked to one carrier, they'd never tested 30,000 employees going on VPN and that kind of thing. So, but what I was impressed with was all the carriers that I work with, for the most part, they were also very concerned with the safety of their employees, but there was a little bit of a transition to getting used to working remote. And again, I feel fortunate that we have solutions at DocuSign to help with remote work, but we also needed to step up, because there was a need that needed to happen very fast. And so when I think about groups of people, for instance, in-branch agents, they needed things like DocuSign accounts very quickly. You know, they're very used to paper, going into someone's living room and signing documents and that kind of thing. And so they needed to be trained and enabled. But what I think I was really impressed by is, we always say insurance is slow, insurance is very conservative, but the change management that occurred was fascinating. And you know, it was an unfortunate series of events, but I feel, you know, some carriers were better equipped than others, but I was really impressed with the transition to digital and remote working with a lot of the carriers in a very short period of time.
I mean, that's awesome. And Snezhina, I'd love to get your take on some of the things that were driven by the pandemic. But before I do, Dinesh, one of the things that we saw from our perspective was that carriers suddenly realized that there were huge risks that were associated with manual processes or partially digitized ones. And one of the things that we've shared is that a process that is 99% digital is still not fully digital. And it seems like some of the things that you all do from a DocuSign standpoint were things that carriers wanted to leverage very quickly in recognition of some of this manual processing, correct?
Yeah, there's been a kind of an evolution in going to digital. Sometimes we call it crawl, walk, run. And run is really getting that, you know, entire straight through process with all the systems integrated. A lot of carriers were in that crawl phase where, you know, part of it was digital. That's not necessarily a great experience. I think what we saw was a lot of the carriers, it was in their plans. They knew they needed to do it, but it wasn't a priority. And so a lot of these projects were planned for Q4, Q3. We definitely saw them accelerated in terms of integrating, but I think initially they were definitely, there's a little bit of a, let's go after the low hanging fruit first.
Yeah, one of my friends who's the CIO for a carrier in the Midwest, his comment was, no, we're going to do digital this time. We really mean it this time. And I think that that's been part of the recognition. Snezhina, I'd love to hear sort of your take about the pandemic hit. How have you seen things adjust and adapt to that? And then B, I want to come over to you next and talk a little bit more about what's going on with carriers. But Snezhina.
So there are two aspects to the question. On one hand, how did the pandemic influence the consumer demand and overall how people, the overall behavior for people in terms of shopping? And the other hand, how did the carriers responded, or how are carriers responding? So from a customer experience and demand, we are very close to it since we are very much a direct to consumer company. So we saw over days, sharp drop in demand, 30-40% for 3 to 4 weeks in the middle to the end of March and then part of April. But then things started to recover gradually. There was another interesting aspect from a customer experience perspective that we've never seen so much demand in June. For car insurance specifically, but it almost felt like some people delayed their purchases, maybe car purchases or just generally reshopping, just to make sure that they've settled down and they know what their future would look like. We definitely see a lot of pressure in terms of cost savings. So from one hand, people, mobility has dropped 40% or even more in some states. On the other hand, people are paying very expensive insurance premiums, often with very healthy coverages. So people are definitely reevaluating whether or not they have to keep their insurance premiums. But we have a lot of studies, and a lot of the experts would agree, is that just don't cancel your insurance premium, never. And on the other hand, the carriers have been piling a lot of profits because this has been 2-3 fortunate months for them, that very few people were driving. So there were very few claims being submitted during that period. So because of that, and because of rising unemployment, they felt the pressure to provide discounts. And we have done a lot of studies tracking how different carriers are responding. And we have seen a lot of smaller and regional carriers that are being some of the most generous ones, where their discounts will go all the way to 30% of premium for a few months, where some other carriers on average would give back about 15% of premium discount for about 2 months. So the pandemic has definitely shaken the carriers in a big way, because yes, profits are great and things are good, but going back to an office to buy an insurance is not going to be the way. So they have, we have never seen more interest in working with us, and also thinking about rethinking their digital distribution and their digital enablement to be able to really facilitate the new way of buying insurance. And car insurance carriers are definitely have led the chart, but we have seen a lot of innovation also on the home insurance side as well as on the life side. So for life, it's a whole different animal. Obviously, a lot of people have been looking to buy insurance. Now life has become not only the nice thing to have, but a lot of people see it as a must thing. And what we heard and we saw is that there was a huge spike in search and demand, but a lot of carriers were holding on issuing the policies because they didn't know how to be able to price that risk, that new risk. And we've seen a lot of new carriers that are much more digitally enabled, and in a lot of cases do not require a medical exam, taking a huge benefit in that very much uncertain environment.
That's awesome. And a couple of things about that I think that we're seeing too. You know, on the P&C side with auto insurance carriers, because of the decline in driving, which then corresponds with a decline in loss experience, they've got to be very careful, because if they don't dividend or discount back, they wind up in a situation where the departments of insurance will no doubt force them to take that out of the rate. So by discounting, they get to keep it in the rate for a time and decide what that future state looks like. So a very smart play. On the life insurance side, it's interesting because we've seen some carriers, particularly in the final expense or the pre-need market, where their loss experience has been, well, terrible, because the COVID pandemic has actually impacted that audience or that consumer group very, very significantly. On the other hand, this is a very interesting story, and B, I'd love to get your take on this, given how much you work with carriers. We've seen some carriers that had made really significant investments in their digital capabilities up front, including the ability to do underwriting on a fluidless basis, that actually have had barn burner sales results since the pandemic hit. On the other hand, we've also seen carriers that were more in a world where they were sort of working with 1990s or early aughts technology, that were suddenly in an eyes wide open, uncertain what to do world, and their sales results have been dramatically less positive. So B, I'm sort of curious, from your standpoint, as you're looking at different insurers and potentially different lines of business, are you seeing impacts and reactions as carriers get ready for what comes next? And are there any things from a technology standpoint that you think are really important here?
Sure. And you are correct. You know, we did some work, and as you know, early days of the pandemic, kind of looking at what phases did we expect carriers to go through and how they are going to kind of come out. You know, when it's not, you know, kind of in this more lockdown mode, and what's going to predict who's going to succeed as they come out of that, right? And so testing that in different questions and research that we did, and in this kind of mid phase that we're in right now, many of the carriers, both life and P&C, for obvious reasons, they are investing in looking at areas where they can save costs, right? Some of that cost savings, they're looking at just, you know, how they have to change their business model a little bit, but also just in automation capabilities, you know, from to your question on technology, investing in automation for their processes to take cost out. And in anticipation of coming out of, you know, kind of this mid into where it is back to, you know, a little more predictable business, not business as usual, but more predictable business, is coming out as a, you know, a leader. And one of the key predictors in who will come out of this as leaders is where, you know, where is their level of investment in digitization today? Because if they didn't have, you know, what we're finding and working with them both on life and non-life, if they didn't have some of the digital investment already underway, they are playing a very difficult game of catch up right now, because they have to have the digitization of their environment, both in automation, the client experience, being able to have access to data that lets them think about how, you know, how the risk pools are changing, right? Insurance companies change as society changes. They, you know, the product mix and changes as risk pools change, as society changes. And today that requires data. And so if the digital efforts, you know, kind of weren't part of their company today, like you said earlier, this time we really mean it, then they are not looking at themselves, you know, kind of being able to come out with the strength that some of the others do. So the leaders are the ones that have the ability to take the innovation in and put that on top of our, you know, the digital efforts they already had in place today for their company. And most importantly, access and use the data that's a part of their supply chain, right? That I mean, that is the insurance company's supply chain, and that's what they're looking at. So that, you know, that's the work we're involved in with enterprises. How do they, with the carriers, how do they bring those capabilities in to know they're never going back to be able to be kind of the same rate and pace and in normalcy that they had previously?
Yeah, I think that's a great point. And, you know, one of the things that we've seen and one of the things that I talk to our clients a lot about is this notion that consumers don't necessarily think about my experience for my life insurance company as compared to another life insurance company. They think about it in terms of their experiences more broadly. And without naming names or identifying companies, my personal experience when the pandemic hit was fascinating, because my bank sent me messages every other day on things that they had done, improvements that they'd made, the digital capabilities, and obviously that was driven by good data. My property and casualty company, every third day I was getting a message. So they were clearly on the same sheet music, little slower cadence, obviously slower transaction volume. My life insurance company sent me a lovely form letter once, which included a phone number I could call should I have any issue. And that just seems so completely inconsistent with what was going on with the rest of the world. So B, I think to your point, these changes or differences really get exposed by the pandemic, and it encourages carriers to kind of get with the program, right? Correct.
That is absolutely what we're seeing. And as they look at how are they going to grow, you know, how are they either going to deliver new products or get to a broader market, they have to have the data, and that data has to be accessible to them with new capabilities. Think, you know, from looking at innovation and InsurTech capabilities, that's where then you can start to build on top of that data to give them new insights, to help them better analyze, you know, kind of point of sale insurance, et cetera, right? Opens up a space that wasn't there previously.
Rob, if I may chime in to add to that or support what B's saying, you guys are absolutely right. I mean, look, we as CSAA have a vast track record of really being there for our members, right? We've given money back like everybody else has. But in addition to that, we've also launched a chatbot to leverage sort of the AI and machine learning and make it easier for our members to engage with us around their policies. We've also have been going direct to the consumer in a channel fashion that is not is unusual in the insurance industry, as you may know. So there are things that we're doing specifically, and we will also be this quarter launching what may be the industry's very first data sandbox for all the reasons that you and B are mentioning, but we will make that accessible to third parties now to leverage and build applications on top of some of our data as well. So I couldn't agree with all of the points that both you and B are making. We are leaning in to this and trying to actually do something about it here.
That's awesome. And this concept of innovation and investment. I did want to pivot a moment on something there, Sanjeev. You know, I'd really like your take on this. One of the initial reactions we saw early on with the pandemic was effectively companies saying, hey, listen, innovation's dead. I got to get focused here on just keeping the ship from sinking. But our take is that things have actually changed, and that there is a different recognition now of the role of innovation and some of these investments. And I'm curious, given your focus in terms of the investment tranche here, what are you seeing and how are you seeing it play out?
You know, it's a bit of a large spectrum here, right? So those entities that seem to dabble in this do pull back. But those corporations that have professionalized the investment function are leaning in. We at Avanta are leaning in. In the last quarter alone, we have made 3 brand new investments. Since COVID, we've also been working with our portfolio, our existing portfolios, to either raise additional rounds. So we've done 3 follow-on fundings as well, but have ensured that all of our portfolio has enough cash runway to weather this storm for at least another 12 months or longer. So we are definitely leaning in. And I think you're seeing some of the stronger, more, and not just in insurance, but in corporate venturing in general. And even in the venture community, those that have a strong thesis-driven approach, this is the time when some of the best companies actually get created. You know, this pressure that we're under is a great crucible under which a lot of companies do grow. And so for those that have the wherewithal and the opportunity to make something, you can actually find some interesting and really compelling opportunities. And so we are doing that. And that's our core belief. And we're lucky and fortunate to have a corporate parent that is supporting us in doing so.
That's fantastic. Snezhina, I saw you sort of smiling there. I'll loop you into this conversation, but it's probably appropriate to once again use the Winston Churchill quote that, you know, you never want a good crisis to go to waste. And so I use good in air quotes there to recognize how terrible a pandemic is. But to Sanjeev's point, it clearly has created an opportunity for companies to do things differently. Are you seeing some of that in your world?
So we have seen a lot of investment in insurtech over the last 3-4 years. And a lot of it has also been on the promise, on the belief that these new companies could be disruptors and could really be able to compete with the Fortune 500 major carriers in the United States. So the pandemic is definitely putting a pressure on operational excellence, profitability, on expense ratios in a much more focused way that it has ever done before. So I think that it has making a lot of these new startups that maybe were a little bit less concerned about their whether loss ratios or overall the customer acquisition costs that they're spending in terms of acquiring customers, and really making them become more efficient. I think as to echo Sanjeev's comment, the best ones will be the ones that will succeed because of their amazing focus, not just on innovation for the sake of innovation, but also on operational excellence and operational diligence. So it has, for us, we have been in a very, very fortunate place, because at every point of our history, we have been a click away from profitability. And the click is changing the pay peaks from the current ROI that might be a 0.6, 0.7 to 1 ROI, so that we can be profitable. But majority of our friends in the industry haven't really been that diligent with the money that they are receiving from investors. So really looking back at the way you run the businesses has never been more important, because a lot of us are saying this is not going away in a week or a month or 2, or maybe even it might be there even after next year or so. We have to be more diligent with the way we operate our companies.
I think that makes tremendous sense. Dinesh, I'm going to come back to you in a second to talk a little bit about some of the things you mentioned in your opening comments. But before I do, B, I wanted to just share something that we've seen from our end, and I'll be curious on your take from this. One of the things that we saw early on was sort of this deer in headlight look around, what do we do now? And then we saw a pivot in terms of some of the investments that we saw from an innovation standpoint. So it wasn't that the investments dried up, but that they did change. And one of my CIO friends up in New England said, you know, we were very focused on things that were strategic. And then all of a sudden one day we had to become focused on things that were very tactical because we needed to get something done very quickly because we had all these clear problems or issues like the lack of digitization that I'd mentioned. So they actually framed the term tactical. You know, they were strategic but tactical investments that they needed to make, and they needed to make them in short bursts to get things done. So almost the very definition of agile. Are you seeing anything like that, and are you helping companies as they try and rationalize what they're doing?
We are, right? The investments that companies are now willing to make, right, to drive change in their business is measured in, 3-month periods, not 3-year periods, right? Where, they're the big projects, kind of the big transformational, even still a lot of those big back office projects that are in play, and a lot of carriers still, those, are being reprioritized or even rethought, right? Of how much of those do they need to do, and looking at how can I look at my business now, focus on the digitization of it, and that now means something different than replacing my core systems, right? That means I have to, kind of going back on the data side of it, I have to get clear on what data can I access as part of this digital transformation. I have to be clear on how this is going to reach my client, right? Number one, focus client experience. Probably number 2 focus for them is preparing to be able to have, kind of a changing product set, like I mentioned. And so those investments, they're looking at short-term paybacks, get me to the next level. One, because there's not clarity on what is 12 or 18 months out right now. They have to conserve cash, along the way. And so this notion of big upfront investment for a long tail of return is gone. The other aspect that's coming into this that we see a lot and will increase is as the digitization of the company becomes, more of a leading, initiative for them to look at what does this mean to my risk and compliance posture as well as my security posture, right? So that is a big concern along the way. And that is one of the areas too that we're focused on is how do we accelerate helping clients deal with risk compliance and security as they start to become more and more digitized. Obviously they're in a regulated industry, so that creates some nuances that are different, as well as just the sensitivity of their information that they hold, whether you're P&C or non-P&C life especially. And so as they rush to be able to be in this new environment, they need the support to be able to ensure they still remain the trust. Insurance is about trust. You're selling trust. And if you lose that along the way in your interactions with the client, that's a big problem. So that's another, space where we're hearing they need assistance. We know we're engaging on assistance and building capabilities to help them through that process with that.
That's awesome. Thanks. So Dinesh, I want to come back to you. This was actually a question that came in that was inspired by your opening comments, but it really speaks to the whole conversation around we've successfully transitioned into working from home. There is some conversation going on about returning to the office and what does that actually mean? And as we're watching the ebbs and flows of the pandemic week to week, it may mean different things. So to Snezhina's point, it's not this week, it's not 3 weeks, it might be 6 months, it might be 2 years, nobody knows. But are you seeing anything in particular that you're doing that's been particularly successful with your employees in terms of stabilizing them in their own environments? And have there been any things that you've done or that you've seen others do that speak to some of the challenges that are associated with working from home, including daycare and the lack of schools and things like that? Is that top of mind for you all as you think about the future?
Yeah, yes, absolutely. So I think, I mentioned kind of the stipend we gave around 1,300 is very flexible how you could use it. You know, obviously if there was daycare or babysitting, we just wanted to offer that flexibility to our employees. I think, you know, but then there's also certain things like I'm sure we've all heard the term Zoom fatigue and, you know, limiting meetings, allowing people. I think one of the things that I see is that in general, I think time off is very important, and taking time off and taking breaks. And so I think all that matters, and encouraging that with your employee base. And I see that with a lot of the carriers we work with. The interesting thing with big carriers, though, still challenging to get them on video sometimes. They will do the Zoom meeting, but they may not go on video. But we're getting there. The adoption's getting there. But in terms of, I guess, new normal, there's been some innovations that have happened, and we've seen with DocuSign, but in no way do I feel I don't have a crystal ball, but I feel once the move to digital is made, that I don't see carriers going back to paper and paper process. And it's been super interesting in the sense that with any technology, you always have your early adopters, you want to get to the masses, but then there's always the laggards, right? And this is the first time that I've really seen us get to the laggards, especially, you know, in the agent community and that kind of thing. And I think once they start using it, it's been very powerful.
Well, I think that's right. We've said, you know, it was like we all woke up one day and the only choice was to get into the digital pool, and not by walking down the stairs. You had to fall into the deep end. And so we're all there. And a lot of people got
Exactly.
very comfortable with that, right? So going all the way back seems unlikely. It does seem that we're going to be in sort of a mixed metaphor or mixed media world. But you raised something very interesting, and I'd love to get others' takes on this. You raised this notion of Zoom fatigue. And one of the things that we saw early on was that in March or early April, it was new and novel to do video, so everybody was happy to do video, potentially to the point of overdoing it. And I'm dating myself, and I want to be clear, I was not here when they did this study in the 1920s, but the Hawthorne effect is something that some of you may be familiar with, this notion that in a Western Electric factory in Illinois, they were looking to see if they could change productivity, so they turned the lights up, and productivity went up. And that was very interesting. So then they turned the lights down, and productivity went up. And the point was, it had nothing to do with the amplitude of the light. It had everything to do with changing the environment and putting people into a world where they were a little bit less comfortable. And so turning the lights up to as bright as the sun wasn't going to solve the problem, right? It turns out it's a mixed model. And I'm sort of wondering if you're having any experiences with that. And if you're doing anything to say, hey, listen, sometimes it's perfectly reasonable to have an audio only call. Sometimes there are just different approaches to doing things that keep people more engaged and help turn the cameras on when the cameras should be on. So jump ball on that one. Anybody have any take on that? B, I see you sort of smirking, so maybe I'll ask you if you've got anything that you've seen in that regard that's encouraged productivity.
So you are absolutely correct, right? You kind of go through these phases of what people are doing and what they're not doing and how they're behaving, et cetera. And, you know, have cocktail parties, don't have cocktail parties, you know, all of that. But one of the things that we established pretty early on, and so when everybody was working from home, is kind of, I think there's like 12 principles of what to expect of each other kind of in this new normal. And we distribute that to, you know, all 400,000 employees, right? And in those principles, it was, you don't always have to be camera ready. Respect that. There may be children in the background, or, you know, there may be dogs. then that continues to kind of morph as this goes on. To your point, our behaviors are changing, our fatigue is changing. You know, people are at risk of working, you know, sun up to sundown, you know, and not moving, if, you know, if you don't think about it. So it's absolutely a dynamic we think about every day, you know, for our employees, and especially globally, difference in norms there as well. And so you have to you have to allow your employees to react in the way they need to be at that point in time, because it's not the same. We're not in the office together. You're not getting in your car. There's none of that difference. So they got to create differences other ways, and you know, maintain their own productivity and be supported. So that's very, very much something that we talk about a lot. And how
I was just going to say, I think that's fantastic. And, you know, Dinesh, you were talking about people taking time off. We hear companies worry about people not taking time off, potentially because the alternative is to watch the news all the time, which is clearly not a great alternative. But we also hear companies talking about the role of leadership. And Sanjeev, I was going to ask you if you're seeing any of this in your world, but you know, this notion of people won't take time off until leadership takes time off, and then is it really time off, or are they just working from some other location? I will share an example. This is a public example. New York Life, their CEO said, we've got to find a way to give people some time to be relieved from all of the pressure. So he sent out a calendar invite to hold lunchtime to every employee in the company. So if you want to schedule a lunch meeting, you're now going to conflict with the CEO. That seems like a pretty direct conversation about what his expectations are in that case. But Sanjeev, any examples of leadership and helping people get better at working in this environment that you see? And then I was going to ask you as a follow-up to that, are there any innovations that you're seeing right now that you think are particularly creative or particularly emblematic of this pandemic-related time?
So two great questions. I think I personally don't believe that we ever go back to 100% working out of offices, right? At best, 50% of the people never return to an office environment. That has huge implications not only for real estate, but for all of the supporting businesses around that. Do we even need, in Gen Z, there was a big push in urbanization, right? Is that even going to backtrack now? You're seeing a lot of Gen Z move back home because they no longer need to be in these urban environments. With respect to work from home, we are trying to do some things around that. We're scheduling happy hours, not company-wide. That's actually an interesting notion too. But in the different divisions and groups, the teams, even my own team at Avanta, we have been scheduling sort of happy hours with the team. And then we run a studios function. So we try to schedule some social time built into that. I think one of the fundamental challenges that I have with video is, you know, a large part of my business, my day-to-day is building trust with people I've never met before. That's what I used to do prior to COVID. In meeting people and getting to know them. That, in business, that is still a challenge. And Zoom or Teams or any of these other video functionalities, it's going to be interesting how we resolve or solve for that going forward. I don't have a great solution for you. But in terms of where I echo B and others that have said this, I think it's incumbent on all of us, but also on the culture that we as leaders set to say, look, it's okay to take time off. Zoom meetings tend to make a 15-minute meeting feel like an hour, or half an hour. It's double, actually. So 15 minutes can feel like 30 minutes because of the cognitive overload. You're seeing all these things moving. Your eyes are constantly going back and forth, and that cognitive overload adds up for each of us. And so if you think about it, one, each of you are probably a lot more mentally tired at the end of the day than you would have been otherwise. And B, you're probably scheduling interactions that you would have just had ad hoc. So now your day becomes back-to-back meetings that never should have been. So these are some things that we, not only as leaders, but each of us as individuals, have to go manage and figure out. I don't have a magic bullet or a silver bullet for you. I wish I did.
Well, I think the key, right, is that there is no single answer or one-size-fits-all solution. This is a series of incremental things that people need to think through. A friend of mine, CIO at a different tier 1 life insurance carrier in the Midwest, shared that they've actually structured it so if you default to setting up a meeting, it doesn't default to an hour anymore, it defaults to 45 minutes.
Yeah. No, we've done that prior to COVID as well. All my meetings are now 45 minutes to give you that. But agreed, everybody's going to have to figure this out, and it's going to be different for each one of us. I cut you off. I apologize.
No, your point is exactly right. It's these incremental things that are going to become so important. And you did it before COVID-19. I was going to say, when I worked in New York City, we did it because we needed to build in elevator time to get back and forth in the building. So it turns out what's old is actually new again. Yeah. Sometimes it's just a matter of repurposing what were really good ideas in a new reality.
I mean, look, I used to go work out because part of my commute was I would leave early, go to the gym, and then go to the office. I no longer have a commute anymore. So, and that workout time kind of gets taken away. So you've got to rebuild it in. It's not easy.
Absolutely. So we're down to our last 5 minutes or so, and I want to be mindful of the time constraints. I've had a couple of questions come in. Again, we appreciate everybody participating. One of the questions that came in was, are we seeing any new product launches in the life and annuity space during the pandemic as the risk of death changes and potentially people are more interested in life insurance? I would say we are certainly seeing changes in the product. We're seeing new products brought to market. But back to something we were talking about earlier, part of what's driving that is not just the pandemic, but also some of the other environmental factors, including the historically low interest rates that carriers were facing. And so what we are seeing is simplified products, products that are more term-oriented in nature, products that are more speaking to some of the demands and needs of the millennials or younger Gen Xers, as opposed to baby boomers like myself and older Gen Xers. You know, there is this interesting phenomenon that most life insurance companies, I've said, have not figured out how to sell anything to anybody born after 1975, which turns out to be the middle of Gen X. So that's one interesting fact. But you look at the data from LIMRA, and it clearly shows this to be the case. So the pandemic may actually be accelerating companies trying to figure out how to get after new generational needs and get after those needs in new ways or in ways that those consumers are more interested in interacting. As Snezhina, I think that's what you were talking about in terms of some of the digitization and recognizing that it's not just the product, but it's also the user experience, yes?
100%. A lot of the carriers that we've talked that need to fix their online buying experience are now all over it. And while before they will be like, yeah, this is in the next 5 years, now we see massive amounts of money. I mean, one of our carrier partners is investing $500 million in fixing their digital experience, which is amazing. I do see a lot more awareness of self-service as well, and the carriers that have been ignoring the fact that they need to have online buying experience so they can allow people to buy are starting to consider that. There has been traditionally a push to a lot of the direct-to-consumer carriers, especially in P&C, have been winning the game on the customer and the digital consumer. So now everyone is direct to consumer. So more and more of the carrier partners are looking at, if they don't have yet a direct to consumer arm, they're refiguring how to do it.
Yeah, I think that's really important. And I know we're approaching the top of the hour, so I want to thank everybody for participating in what has been one of the fastest hours of my week. But I want to share a personal story that picks up on some things that all of the panelists have talked about. We're in this new world. We're not going back to February of 2020 anytime soon. We've learned a whole series of things. The digitization is real. We're even changing some of our behaviors. So for instance, at 5:15 in the East, so in 15 minutes, I have another conference call with my grandsons because it's reading time and I read to them every day. I'm helping my daughter out with a bit of daycare. I'm also trying to stay connected in ways that I couldn't have before or didn't before. And a part of the question I asked myself is, why didn't I do that before I had the technology? I just didn't have the need, right? And so now I have the need, just like insurance carriers have this need to interact with customers differently, engage their distribution partners differently. It's not that agents are going away. It's not that fax machines are going away, right? It's that we're going to have a much more mixed model where there's going to be a lot more nuance and subtlety to it, which I think is where you get to the point where you recognize that innovation is really going to be critical. The investments are really going to be key from a competitive standpoint, but it may well look different than it did before, which brings us back to that tactical comment, right? As B said, in some lines of business, it may be less about changing out the core record keeping systems and much more about getting the data sorted out so that those digital experiences are better, so you can actually deploy some of the tools that companies like DocuSign and others have enabled. So again, I want to thank everybody for participating today. Denise, thanks again for including us in this. We'll look forward to catching up with you all soon.
Thank you everyone for joining us. We appreciate it. Great conversation.
Thank you.
Thank you.